It's pretty surprising that Vanguard's top performing ETFs have actually outperformed the market consistently for the last 5 years. When you think of Vanguard's ETFs, they're favored among most investors. They offer a diversified range of investment opportunities and, of course, have very budget-friendly ETFs, which have a very low expense ratio. To start this off basic, looking at ETFs, what is an exchange-traded fund? Very easily, it is a group of different assets that can include stocks, bonds, other investments, into a specific fund that is listed on an exchange just like an individual stock would be. Now, this can also fluctuate in price depending on what the stocks do that are held within that ETF. In today's video, we're going to be looking at 7 of the low-cost champions that we see from Vanguard, but a lot of people ask me why Vanguard. Now, of course, Vanguard is the #2 asset manager in the world with over $8 trillion in assets, just trailing behind BlackRock at 9.4. And overall, when you look at the offering that Vanguard has, it is super competitive when it comes to the expense ratio, which is the reason why I love investing in it. Now, of course, most of you know if you've watched my channel, I only invest in ETFs, which means the exchange traded funds low cost passive fund index. So you can actually put your money into these ETFs. It is kind of a set it and forget it mentality that you can put money over an extended amount of time and reap the benefits of a big growth portfolio. Let's go ahead and kick this one off with one that I do hold within my personal investment portfolio, which is the Vanguard Total Stock Market ETF. Now, of course, this is the entire stock market. When you start looking at the large cap, the mid cap, and the small cap, this encompasses all of them with a super low expense ratio of a 0.03, meaning it is 30 cents for every $1,000 invested. Assets under management in the VTI is $375 billion. That is right, with a B, and it does have a dividend yield of 1.4%. Now, of course, this one is the one-stop shop. When we look at a 3 ETF portfolio, this is really one of the cores. So instead of just investing in, let's say, the VOO or the Vanguard S&P 500, this encompasses all of the stock market in itself. Now, of course, there are 3,800 different stocks in this portfolio, which represents all sectors of the stock market and all size of companies. Like we had said, it includes the large cap, the mid cap, and the small cap. And of course, it's kind of crazy because this also doesn't have an equal weight. This is heavily weighted towards those larger companies. So when you're looking at your Apple, your Nvidia, your Google, your large companies, the multi-trillion-dollar tech companies, it represents a big chunk of this fund itself, which in my opinion is the way that it should be kind of weighted. You could either go equal weighted or you could go like this one and go heavily weighted based on the market size, which again, when you have these high-tech companies that are performing exceptionally well, you will see a much better performance out of something that is the total index or even the VOO for the S&P 500 because of those companies being able to carry their weight. The second one we look at is the Vanguard Dividend Appreciation ETF. Now, this is a dividend style stock. Now, this one, unfortunately, I do not own in my portfolio. $75.6 billion under management with a 0.06 expense ratio, meaning 60 cents for every $1,000 you invest. And of course, the dividend yield on this one is a 1.8%. So when it comes to dividend stocks, the reason for them is really a lot less volatility. When we look at some of the large ones like the HD, you get dividends back from these companies. Now, dividends can provide another source of income and a source of passive income when you're ETF investing. And of course, looking in here, when you look at dividend producing ETFs, they tend to be a lot more reliable with the stock price. And also it uses dividend returns over an extended amount of time. Now, this one, the Vanguard Dividend Appreciation ETF or the VIG, is composed of dividend stocks, which have a track record of paying dividends and growing dividends over time. This is very important because even if you're not seeing the price of the ETF actually appreciate or actually go up, which it usually does a little bit, but it is more of a fixed asset that is going to provide you with another stream of income. And of course, that stream of income is going to get larger and larger over time, which means through the compounding effect that we see, you're going to be able to essentially generate income with this for a massive payday down the road. A dividend or an ETF like this, you could continue putting money into and just letting it reinvest, letting it roll into itself, getting to the point where you actually want to supplement your income. When you retire, you get on Social Security, you can have and start taking dividends out of essentially the larger snowball that you did with the dividend ETF and making, again, another paycheck that you could be getting out of there. Third one we're looking at is the Vanguard Real Estate ETF. Now, of course, this is real estate focused. 31 billion under management with a 0.12 expense ratio, dividend yield of a 4.3%, so it's doing pretty well with a ticker symbol of VNQ. Now this one overall has a low risk and really growth payout. Current dividend yield not super impressive when it comes to REITs, but a lot of investors prefer more of that upfront yield. Then this is where it comes in. Now this is the best Vanguard ETF when you're looking at real estate. It holds real estate, investment trusts, or REITs, which we've seen a very special class of companies that enjoy tax benefits to accommodate the capital investiture of the nature of real estate and really property management. However, in exchange for those tax breaks, REITs must deliver 90% of taxable income back to the shareholders, which is the reason why these are very successful. Now, when you look at this specific Vanguard Real Estate ETF holds 170 different REITs. When you look at industrial warehouses, when you look at telecommunication towers, when you look at malls, they are holding pretty much a very diversified portfolio within here. Again, holding 170 REITs, which is kind of crazy when you look at the dividend yield. And of course, that dividend yield is more than twice of the previous fund and almost thrice the broader market that we see with that S&P 500. The fourth one on our list is the Vanguard Information ETF, or the VGT. Now this is one that I do hold in my portfolio. So out of the four we looked at, I do hold two of those personally. Now this of course is focused heavy into technology, $62 billion under management and a 0.10 expense ratio, dividend yield of 0.7. You'll notice the dividend yield is very low when it comes to dividends and when it comes to REITs. However, when you look at the growth, when you start focusing on the AI technology, it roughly holds 320 different technology companies, ranging from the big names that we absolutely love, the Microsoft, the Nvidia, to very small software developers, chip makers, really growth-oriented tech firms, which makes this a really good year. When you look at 2023, tech was just crushing it, and now we're seeing the exact same thing in 2024. Looking at companies like Nvidia, it is kind of crazy how much growth we have seen. Now, even in 2022, which again, when Silicon Valley was facing a lot of turmoil and a lot of troubles, they still did incredibly well. If you're looking for a long-term view, there's very dim part where they're saying technology and future stocks are not going to grow, making this an ETF a perfect buy. And again, this is one that I do hold in my personal portfolio. Now, before we get into the next one, go ahead and subscribe to the channel. Let me know in the comments what ETFs you do hold. And of course, with the next one, we are looking at the Vanguard Total International Stock ETF. Now, me personally, I do not hold anything international. When you think of a majority of larger companies in the United States, most of them are on a global spectrum, meaning they are in a lot of different countries, in a lot of different places, which means that I only invest in the United States. But of course, looking at the Vanguard Total International Stock ETF, it holds international companies. Now, this has $68.3 billion, 0.08 expense ratio with a 3.4 dividend yield. Now, of course, looking at the world, this is investing outside of the United States. This Vanguard ETF is an ex-US offering. They do not include companies that are in the United States, and they do not overlap with any of your domestic holdings. So again, if you're holding something that is outside in an ETF like this, you are not going to have any overlap at all with US companies. Ticker symbol for this one is the VXUS. And of course, when you start looking at some of the companies, there are over 8,500 companies globally. When you look at Japan, when you look at Switzerland, when you look at British Columbia, when you look at Korea, they have some massive companies that are not US based that have a very big presence here. And of course, with an interconnected global economy, it is a little naive to just stick to the United States because, of course, there are so many markets out of there. But when you look big picture, the United States does cover roughly about 50% of the world economy, which is kind of crazy, which is the reason why I only invest in the United States economy. With number 6, we continue with the global markets with the Vanguard FTSE Emerging Markets ETF. Now, this one, of course, is the emerging markets or the countries that are kind of going global, but might not be there yet. Now, this has $76 billion under assets, 0.08 expense ratio with a 3.5% dividend yield. So very good. And of course, the ticker on this one is VWO. Now, this one, of course, is looking for a higher growth potential international ETF When you look at markets like China, when you look at South America, this is really the ETF that you want to focus on if you're looking to invest in those countries. Now, this one does hold 5,600 stocks, which of course 30% of those assets are in China, 20% in India, 19% in Taiwan, 7% in Brazil, and the rest of it is kind of scattered around the world. Now, blue chips like Asia does have it in there as well. But again, some of the smaller components kind of over the trade, or it says over the counter US stocks could also be included in here. And of course, it is really putting all of this together in an inexpensive bundle that you can really focus on those emerging markets to get some growth out of there. And the final one we look at, number 7, is the Vanguard Total Bond Market. That is right. This is a fixed income ETF. $104 billion in here, making it one of the absolute largest, 0.03, which is the expense ratio, and a 4.8% SEC yield. So we are yielding almost 5%, which is right on par with CDs that we're seeing, kind of the guaranteed funds, and also a lot of the liquid savings rates. When it comes to high yield savings rates, it is right on par. Now, of course, rather than focusing on just one Vanguard ETF, it is really imperative. This is a massive, especially in rising interest rates. It kind of has leveled out at this point, but the Federal Reserve has said that interest rates are going to stay kind of where they are right now. And of course, when rates go up, the value of the bonds go up. Now, this one is the BND. This is the best Vanguard ETF for diversification exposure out of all of the categories. And of course, there is very little risk in there because this one holds over 18,000 investment grade bonds, which a lot of them are government bonds, some of them are corporate bonds. And also when you look at some of the top blue chip companies, not really as risky, doesn't really hold as many junk bonds that we see in some of these dividend. And of course, it doesn't hold a ton of junk bonds, which of course can offer you a little bit more diversification and growth, but it also does come with a little bit of risk. Now, of course, when you look at the BND, like I said, there's 18,000 investment grade bonds in here that boast a very high credit quality. So the companies more than likely are going to be paying this back, and you get a ton of diversification because of the bonds that they are holding. All right, guys, so that is going to do it for our 7 low budget champions when it comes to Vanguard. Now, of course, personal, I do hold the Vanguard Total Stock Market ETF, which is the VTI. I do also hold the technology. All right, guys, so that is going to do it for the 7 best Vanguards for the low cost champions. Now, me personally, like I was saying, I do hold the Vanguard Information Technology ETF, or the VGT, and I also do hold the VTI, which is the Vanguard Total Index, 2 of the great ETFs that they do offer through Vanguard. So guys, that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.